Good morning, traders, and welcome to BCR's morning market analysis. First up, let's have a look at the US dollar. The DXY is hovering around 97.65, supported by hawkish commentary from Federal Reserve officials. Chicago Fed President Goolsbee emphasized that inflation at 3% still remains well above the 2% target, pushing back against the idea of concentrated rate cuts. Fed Governor Voller also noted that if the labor market continues improving, the case for further cuts weakens. As a result, rate cut expectations have cooled significantly. The probability of a March cut has dropped to 4.1%, while June odds have fallen to 43.9% from above 50% last week. The shift has also helped maintain the dollar strength during the current data light period. Technically, the index is testing resistance at 98.07 and the 65-day moving average at 98.15. Momentum has shifted into consolidation. A sustained move higher would bring the 200-day moving average at 98.37 into focus. Support sits around the 97.35 mark, followed by the psychological level of 97. Next up, let's have a look at crude. WTI crude is trading near 65.6 per barrel, with geopolitical tensions driving price action. Iran has indicated readiness to reach an agreement with the US, limiting gains, but uncertainty surrounding nuclear negotiations continues to support a geopolitical risk premium. The second round of US-Iran talks on Thursday is key. Escalation could reignite upside momentum, while signs of easing tensions may unwind the current premium. Resistance stands at 67.24, which is this week's high. A break above would shift the range higher, with further resistance at 68.37 and the $70 psychological level. Support is located around the 64.42 level, followed by the 200-day moving average at 62.29. Next up, let's have a look at gold. Spot gold is trading around 51.70 per ounce in the Asian hours. Hawkish Fed commentary has cooled rate cut expectations, pressuring gold after recent safe haven strength. Earlier this week, gold approached 52.50 before pulling back to 5100. The broader rebound followed last Friday's sharp sell-off after the US Supreme Court ruled that tariffs announced under the IEEPA were illegal, initially triggering a drop before prices recovered. Lower US Treasury yields also continue to reduce the opportunity cost of holding gold, while widening futures spot premiums remain supportive. Technically, gold broke above the 5100 to 5125 bull bear dividing line, but faced resistance near 5238 and 5250. Support remains around the 5100 psychological level. A break below would expose 5064 and the $5,000 psychological level, while a move above 5250 would shift focus back towards 5300 and the prior record high of 5600. Lastly, let's have a look at the Australian dollar, which is trading around 71.20, extending gains after stronger than expected inflation data. Annual inflation for January came in at 3.8%, which is above expectations, while trimmed mean CPI rose to 3.4%. Combined with a tight labor market and solid wage growth, markets now expect a rate hike in May, with around 60% probability of another move in November. The RBA remains data dependent, but has also resumed rate hikes earlier this year. Technically, the pair remains slightly bullish, holding above the rising 20-day moving average at 70.46. RSI near 62 reflects positive but moderating momentum. Support is seen at 70.46 and then 70 cents and then 69.73. Resistance stands at 71.47 with 72 cents, the psychological right above it. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.